Done? Hello, done?
Yes.
And you also know about the term credit. Credit means, can you recall it?
Credit basically means that something that is when a business sells something and
Mhm.
then the customer buys on credit, so
Mhm.
they'll get the product now but pay
Mhm.
later.
Okay. In one term, credit means,
Accounts receivable.
no, I am telling you, accounts
Oh,
receivable is accounts receivable is one aspect of credit. What is that? If the business has sold something and not received the amount, then is accounts receivable. Means not received. You may say that the credit has dual aspect, double rule. RECEIVED, not received, or it may be not paid. Not received when it arises, if you have sold, business have sold something and the amount, money not received or money not paid. If money is not received when you have sold, then this is the credit. And when you have purchased and you haven't paid, then it is also what? Credit, because you have to pay it later after 1 week. So this aspect, money not received and you have sold, this is known as accounts receivable. And if you have purchased and not paid, then you have to pay. So what should it be? Tell me. Ah, it is account receivable. And what it will be? Because you have to pay. So it would be, hello,
credits.
sorry?
Credits.
No, no, no. Account receivable and double part is, second part is, dual aspect is accounts payable. Got
Oh,
it?
okay.
Done?
Yes.
So these are the two aspects of the credit. Credit, again, just recalling, because these initial lectures are very important. Once you have made your concepts clear, then we will be doing fluently the accounting procedures. If money is not received when you have sold something, then it would be accounts receivable. If money has not paid, if you have purchased something, then you have to pay as well. So then it would be accounts payable. But accounts payable will not be asset. It would be something other that we will discuss now. So one account is what? Assets. And what accounting is? The counting. So how many cash, how many machineries, how many investments, how many accounts receivable, how many stock, how many equipment and organization is. These all come through what? The counting of these all head of accounts. Okay. Now second account in any organization for the accounting purpose is liabilities. What are the now liabilities? Liabilities are just rewards of the assets. Likewise, assets are the rights owned by the business. Then these are not the owned by the business. Basically, these are responsibilities, or you may call it obligations of the organization of business. Responsibilities and obligations may involve two things. Either any organization have to pay something, or any organization have to perform something. Then liabilities are what? Basically organizations responsibilities, obligations. And what are those obligations? That are that the organization may have to pay something, or the organization may have to perform something. Let's take a simple example of the daily life so that you can understand. I am writing right down here. What about the basically I am telling you the difference between the rights and obligations and how can we it relate to the assets and liabilities. Pay attention. Obviously, there are two relations. One is teacher and other is student. Now, if we see on the part of the student, what are the rights of students basically? A student may say that our right is that we shall be our course shall be fully covered. It is students' right, okay, and they should be taught very in a good manner. It is also their right. Are you getting this?
Yes.
Now, simultaneously, there are also some responsibilities on the part of the student. If a student used to say that we must be taught carefully and covered and like teacher must answer our queries anytime, these are usually what the rights of the students. Simultaneously, there are some responsibilities of the students as well, obligations of the students. What might be these? That students should be regular in attendance. That is very important. Students should take a regular tests and quizzes as well. These are also their responsibilities. And above all, students should produce good result. These are what? Obligations of the student. Done. Now you can easily differentiate between the rights and obligations. So rights are usually the old or the basic things which the students, yeah, which anybody has. And similarly, there are on the other part there are obligations. Now, if we talk about teachers part, so the what the students' obligations have are become the rights of the teachers. If teacher is teaching very vigilantly, teacher is regular, teacher is conducting tests, then it is teacher's right that students should produce good results. And what the students' rights are becomes the teacher's obligations. That teacher should teach them full course. Do not say that this is not important and skip this topic. Plus, teacher should teach them through practical approach that organizations do this, or student teachers should teach them through the current scenarios what are the economic conditions as well. So these are the obligations of the student. So you can see how this grid, anyone's rights becomes the obligations and anyone's obligations become the rights of others. Similarly, if we now talk about the obligations of the organizations, so first of all, we have to pay something. So this is the to pay something. The first and foremost obligation, first and foremost responsibility of any organization is to pay something if any organization has purchased anything on credit. So if we jot down the examples of the liabilities, then it would be number one, accounts payable. Got it? How accounts payable become the liability? Understand? Clear? Hello?
Yes.
Confirm?
Hello? Yes.
Okay, great. Similarly, organizations may have taken loans from the banks. So they need to repay them. So any type of payable, whether it is accounts payable, whether it is loan payable, they all comes under the category of liabilities. Similarly, now see this thing, perform something. This usually happens in the service sector. Let's take the example of this. I have to perform something, or business have to perform something. Uh, let's suppose Mr. A is in the business of tailoring. Okay, what he do? He initially take orders, took measurements, etc. Then he begins to start stitching the dress. Okay, but when he took the orders, he requires his customers to pay him money in advance. Are you getting this scenario? The tailors usually, what tailors usually do, took the orders and took the money in advance. Now, once Mr. A has taken money in advance, now what is his responsibility? His responsibility lies on him, that requires him that he has to what? Perform something, means he have to stitch the dress. Is this his responsibility or not? Are you getting this?
Yes.
This case arises in the case of services, that we are taking money in advance. Now, if we have took money in advance, that is not ours. It is not yet halal, become halal. Once we deliver the thing, then we can that yes, now that money becomes halal for me. So this is my responsibility to perform something. Likewise, it may be in the tuition as well, that many teachers get the fees in advance. When they get fees in advance, means they have to teach the student throughout the month or throughout the week, whatever the case may be. So this is the liabilities case. They have to perform something, and this term, getting money in advance, is known as, this getting money is known as in advance, is known as unearned. Unearned means, as I said earlier, that is, it is not earned yet, because it is not earned yet because it is in advance, and we haven't done our obligation, and this is not yet halal. When it becomes halal, it will be, this portion will be omitted and it will become earned. Clear this point?
Yes.
Done. So liabilities basically have two aspects. Either we have to pay something, or either we have to perform something. Pay something, any payable means we have to pay. And if we have to perform something or getting money in advance, it will be in unearned. For your simple understanding, I am writing here, unearned means getting money in advance for anything. Okay, done? Clear?
Yes.
One more example that is related to payable, but it falls in another category, that is known as bank overdraft. This topic, this point, and this point we will discuss later. We have to just see the term accounts payable and loan payable, which we have seen here in detail. Accounts payable and the accounts receivable are credit terms. Accounts receivable, if we have not paid, then not received, then it is accounts receivable. And if we have not paid, then it will be accounts payable. Accounts receivable comes in the assets because we have to receive. And accounts payable in the liabilities because we have to pay. And pay and obligation are the liability. Clear till now? Any question?
No.
Done. Now let's move towards the third account. And that third account is known as capital. What is capital? Tell me briefly. Many students have the rough idea or rough information about this capital. What is capital? Hello.
It really depends on the context. For example, there's human capital and then capital such as
Business
machinery
context.
the business owns.
We have to focus on the business context.
So capital could be something that is materialistic that the business owns,
Mm,
or is it the shareholder stocks?
oof, shareholders stock. Very, very advanced level. Okay. Since we are in the beginning stage, so I am getting it from the scratch. Now see what capital is. Capital means initial investment. Initial investment done for starting any business. Okay. Let's suppose any of your friend or any friend of mine says that, yeah, I am thinking to start business. So the first moment we realize that he will be requiring some cash to start business. So that cash through which he start the business will become what? The capital of the business. Understand? Getting this point? So the first investment done for starting any business will be known as what? The capital of that business. Clear?
Yes.
Now, moving forward, since the first concept, yeah, first we said the first thing of capital came in our mind is that just like of cash, but it is not limited to the cash. The second point for the capital is capital can be in any form of assets, except few that we will discuss. Means premises can be capital, equipment can be capital, stock can be capital, machinery can be capital. Investment is itself, the first type is known as capital. So how it can be assets and how what capital, how it is generated in the business, I think we can discuss it in the next, or we can discuss it now. Have you, I think if you have time, we can discuss it now. Are you fine with it?
Yeah.
Okay. Now, look at this example. Let's suppose this is home, our home, and this is the business premises, business structure. One person is sitting in home and he wants to set up a business, start a business. He realized that he has some previous savings in the form of cash and he invested in the business to start the business first time. This is very important, initial first time. So that cash become the capital of the business because he has invested. And remember what we had said earlier, that accounting is done for businesses. So he started that business and invested cash to start the business. Then he immediately realized that, oh yeah, one chair and one laptop is lying idle in my home. They are of no use. We have another one. So I can also take it in the business as well. So it is going for the first time to start the business. Then this chair, this laptop also become what? the capital, because it is used to start up the business. Now chair is the category of furniture, okay, and laptop is the category of what? Equipment. They also become the capital of the business. Then he realized that one motor vehicle, okay, we just skipped that example. We have also motor vehicles in the business. Then he realized that I have one motor vehicle. Since I have two motor vehicles and one is not in use, so I can use it in the business as well. So he deposited, or he moved that motor vehicle for the business use. Then this motor vehicle also becomes what? Capital for the business, because they are all initially used for first startup of the business. So this motor vehicle is also for the business. Lastly, he realized that since he wants to start the business of import export of sugar, and there are lot of bags, 3 bags in his house, so he took 2 bags of sugar to start the business. That is initially to begin with, then he will purchase or sell. So these 2 bags of sugar comprises of what? Stocks, also become the capital of that business. So see how cash and all other items becomes the capital of the business. Is that clear? So capital is not restricted only to the cash. It can be in any form of the assets. Now what is not included in that form, we can easily identify it, except accounts receivable and prepaid. They are not included in this list, and all other can become the capital as well. Done? Clear? Hello, any issue?
Yes. No.
No issues. Okay. Keep discussion towards today's discussion till now, that is assets, liabilities and capital, and overall what accounting and what we need to know. So we have left with 2 more head of accounts. We will discuss it in the later next session. Tomorrow we will be conducting the session of managerial accounting, same time. Okay.
Okay.
And the link which I have provided will be same, because it is a recurring and we don't need to use new links every day. Clear?
Got it. Yes.
Oh, okay ji, thank you so much. See you tomorrow. Allah Hafiz.
Allah Hafiz.